Hey, how are you? This is Brett Boettge, and I'm pretty excited to go ahead and dive into some real estate economics today. Many of you may not know that I have taught a strategic real estate economics class quite a few times for real estate agents in the area, and this one I think is going to be I kind of boiled down a mini version of this as we're faced with the COVID-19 pandemic here. It's unprecedented. Nobody has any idea what's going to happen. Uh, but I would imagine that there's some key things that we can take a look at to manage everybody's expectations, focused on the most likely scenarios, and identify what numbers are going to be important to take a look at. So I'm going to walk you through a quick presentation here. I'm going to do a condensed version. This is 66 slides condensed into 6 just for time here and attention. Although you probably do have time to watch all 66 slides in a full-length presentation right now. But the mission, or my mission, has always been to go ahead and forecast and advise. So I think long ago, a realtor could go ahead and just be an order taker. You talk to a client, you have a conversation, you take the order, you go ahead and walk it to the finish line. But the thing that's going to make realtors valuable right now, which, I mean, let me clarify. Realtors always, what realtors should be doing right now to be successful is everything that they should have been doing the entire time, the entire length of their career to be successful. And I think that, these slides should call that out. It's like people want to know what's going on with the housing market right now, and there's some very, very key things that we can go ahead and take a look at to advise our clients. Now, again, it's not going to be perfect advice because this is uncharted territories that we're in right now, but we can give good advice and keep people informed so they're a little bit more calm. So forecast and advise is what I always say we have an opportunity to do as real estate agents if we go ahead and pay attention to the right numbers. So I'll walk you through this as quick as I can. First of all, we've got headlines out there, and I think headlines are going to be they're the most destructive things in the world to common sense and rational thinking. And this is a great example of this. So this is one headline here at the top. The housing market now reminds me of 2006, Robert Shiller says. Famed Housing Watch Robert Shiller said Tuesday that the weakening housing market reminded him of the last market top just before the subprime housing bubble burst, slashing prices by nearly a third and costing millions of Americans their homes. All right, you move forward a little bit. This is taken from the same report in the same interview. It was just reported differently. Why the housing market won't crash like 2008, Robert Shiller. So I'm looking at this, you have this same interview, the same data, but we get two entirely different headlines. So the first thing I want everybody to kind of just agree to is don't make housing decisions based on headlines or even a little bit of the copy, because it's all taken out of context. You go try to find the full report, look at the resources and things like that, or just talk to your local real estate agent. What's the number that we should look at right now more so than anything else? And I think it's going to be this in the housing market. It's month supply of inventory. So this is, if nothing else came onto the market today, at the current rate of sale, how long will the housing supply last? So if you're selling 2 homes a month and you have 4 homes that are actively on the market, then you have 2 months worth of supply. So a month supply of inventory, it's also referred to as absorption rate, is the best number to look at because it's kind of the measure of supply and demand all rolled into one nice number for you. And so historically, Steve Harney, who's been great and has guided me on the economics of the housing market, the numbers and everything else since I got into real estate, probably 2005, 2006, is absolutely brilliant. And he put this graph together here, or this infographic. Between 6 to 7 months is going to be a neutral market. That's where we're going to see stagnation in prices. We're not going up, so that's when you buy a house, you can't go ahead and turn it for a quick profit in 12 months like we've seen with 10% annual appreciation here in Palm Beach County. So a buyer's market, you're going to see greater than 7 months of inventory, and a seller's market is less than 6 months of inventory. So these are key numbers, and I think if there's anything to pay attention to, it's got to be this. I'm going to go forward just a little bit. This is a graphic that I made to really help people understand perspective, because there's going to be areas that are going to be across the country. You can't give a housing report, really, because that's like giving a weather report for the entire country. It's 77 degrees and beautifully sunny all over the United States today. It's just not a reality. So looking at the different layers here, it'll give us some perspective. So the first one is going to be the national housing market here. That's going to give us the national temperature of what's going on across the board. Then what's going on in your state. So this is still removed from the actual neighborhood that you're in, but at least we have the same laws now, or the same lockdowns as it might be in this point in time. City and county housing market. Now we're getting into the gist of what's happening on a local level. If you're in one of the COVID-19 hotspots, this is where things could look dramatically different, because a lot of hotspots have been locked down entirely, where you're no longer allowed to practice. Your neighborhood housing market, this is going to be interesting to take a look at as well. This could be entirely different than the nation or the city. And even more so, you've got the street. So what's going on this specific street? And that's where housing decisions should be made, in my opinion. So to provide all that information becomes a little bit of a challenge, but I'll help you with that today. All right, so we covered month supply of inventory, and I've got this great case study here. This is a neighborhood in Palm Beach Gardens, Mariners Cove. And if you look at this is 2016. Month supply of inventory was 16.9. In 2017, it dropped to 10.79 in this month. You look at this peak graphic here. So this is going to be the 16.9, and this is going to be the 10.79 here. You look at this, I think this is pretty interesting here. Look at this. So 20 months of inventory, and then it drops all the way down to 6. This is when you want to buy property, and this is ideally when you want to sell property. So prices will depreciate when you have this high month supply of inventory, and when the graph drops down here, this is now a seller's market. So remember, this is right around that 5 months mark. This is certainly going to drive prices back up, and it dipped well below 5 in this graph as well. So here it goes again. So this is Mariners Cove. It goes from 6 months, or a little bit less than 6 months, all the way down to basically no months here. So this is a really, really deep seller's market right here. If you look over to the side, you can see what happened to prices during this period. So the average prices were around $385,000 in 2017. In 2018, they jumped to $472,000, $385,000, $444,000. So it's interesting. And if we go back one, you can see from 2016 to 2017, the prices went the other direction. So it's really easy to get an idea of where pricing is going to go just by looking at this one number, the absorption rate or month supply of inventory. So blips are opportunities, and this is where, that if you do come across a blip, where I'm going to be pointing out blips in these videos that I see across the marketplace from time to time as things develop over the next 6 to 12 months, it could be an opportunity. You have one neighbor that's very, very sensitive or nervous about COVID-19, and that fear can spread to a few other neighbors. Now all of a sudden you've got 4 people in the same neighborhood with their house on the market, which shoots the month supply of inventory through the roof in that community. That's a buying opportunity, because it's going to be the first one out is going to be a domino that's going to lead to a lower price and a lower price if those people truly have to sell or are that motivated to sell because of fear. So that'll be something to look at in the coming months as far as opportunities for buyers. In the next 30 to 60 days or so, I don't see too much of a change in the housing market, because sellers are going to be holding their properties back from the market because they don't want people touring them, and buyers are kind of sidelined at the moment as well. And then there's going to be a very serious set of buyers out there at this moment in time that are still purchasing properties, and I think that's important to know that there's still buyers out there. We've got some in the process of closing right now. I think we're probably sitting around $4.5 million of pending real estate sales, even through this. So it's pretty interesting to see. So the blips are opportunities. Just understand that. We'll keep an eye on that. Here's another case study for Frenchman's Reserve. So the national housing market was 4.5 4.5 months of inventory. Now this is old data, so anybody that lives in Frenchman's Reserve, I think this is 2017 or 2018 data right here. So when I get to the numbers and I do the big reveal of where things are on a street level, you can calm down because things have certainly dramatically improved over the last few years. So national housing market, 4.5 months of inventory, that's seller's market for sure. State housing market, 3.9 for the state of Florida, definitely a seller's market. And then you look at the city, so Palm Beach Gardens, that's at 5 months of inventory. Still, we're solidly within a seller's market here. And all of a sudden we look at Frenchman's Reserve as a whole, and it's got 12 months of inventory. Now that's interesting because now that's a buyer's market. So even though the nation, the state, and the city all were a seller's market, we've got one neighborhood right here which is deep into a buyer's market. Now let's go to the street level. This is one street within Frenchman's Reserve, and there's 36 months of inventory on one street. So now that's not a lot of data to work with, but it was enough to go ahead and create this this interesting number. Now one home sale, 2 home sales, when you're looking at that small of an area, impacts that dramatically. But this should still give you a pretty good idea of how important it is to, okay, I see the national headline here. What's going on in my neighborhood? What's going on the street that I live on? Because that's really where you want to make your housing decisions. Now, this is a membership equity country club, so it plays by a different set of rules than the majority of the market, but the metrics all still make sense. The higher the month supply of inventory, the greater the pressure you'll see on prices in the community. The lower it goes, the more stable it can become, all the way down to a seller's market, which would still be defined as less than 6 to 7 months of inventory here. So this is actually one street, and you can see over the same period, so this is October of 2017 here to September of 2018, and the absorption rate just climbs through the roof. And then during that same period, so this is every street other than this one street in Frenchman's Reserve, it's actually declining from 30 months all the way down to 10. Now, this is the street level type of data that you need in order to make housing decisions in any community, I believe. So, and it's relatively difficult to go ahead and pull this information, but it's worth time it takes. So, realtors out there, figure out how to do this. You know, if you want to give me a call, reach out or anything like that, I've got plenty of videos I can share with you that show you how to go ahead and break this down to the street level so that you can help your clients make some great housing decisions here moving forward. All right, so that's just a little bit of the information that I wanted to go ahead and share today. Some general economics pieces of the puzzle that are out there. I've subscribed to Keeping Current Matters at keepingcurrentmatters.com since 2005, 2006. It was founded by Steve Harney, who's a brilliant man, one of Inman's top 100, and he's been a friend of mine in the industry since the day I got my license. So it was looking at his information and the way that he approached real estate that made me realize how pivotal it is to go from being an order taker to an advisor in the real estate business. So really blessed to have met him early on in my career here. And he put together some information to share, which I thought was great. I mean, we all want to know how long this can last. Again, uncharted territory. We can't give perfect advice, but we can guide people on most likely scenarios through looking at the data, not the headlines. So recovery projected. So if you look at this, it looks like a huge drop, a really sharp drop in our economy for the GDP in the second quarter, even more so than the first quarter here, and then a quick recovery in quarters 3 and quarters 4. So I think overall we're going to be in great shape, and this is how it's going to relate to the housing market. Of all the people in houses that are out there with mortgages right now, how many are going to need to access their equity in order to put food on the table? I truly believe that if it comes to a point, if the unemployment, which I believe will climb between 15 and 30%, if the unemployment gets to a point where, all right, now it's a question of I don't have income anymore, I am collecting unemployment, so that's certainly helpful. I got a forbearance on my mortgage, so I no longer have to make my mortgage payments. I don't have any. I've already used my savings, and I've got 401k that I could tap into. And as a last resort, I have to sell my house. The question is, how long will people be unemployed? Because if they're unemployed and they have to go through, their savings, their 401k, and then the only thing that they have left, unemployment runs out. The only thing that they have left to go ahead and put food on the table is their equity in their home. I think that's the point at which people are going to start putting their homes on the market. And I really think based on the sharpness of this curve, we're not going to get to that point. So, and certainly there's going to be some pent-up demand as well from basically stalling out our housing market for a couple months here. So that's that. I'm not an economist by any stretch of the imagination, but that seems to make the most sense to me as far as the most likely scenario forward, having lived through this before, 2008, 2009, and 2010. If unemployment is very short-lived, the high unemployment numbers are very short-lived, we should see everything, we should see the housing market navigate through this pretty well. So how long is it going to last? This was pretty interesting. If COVID-19 were to end today, how long would you estimate it would take for your company to get back to business as usual? So of the people that were polled in this, 66% said less than a month, 90% said 1 to 3 months. So if today it was done, 1 to 3 months, we'd have 90% of the economy back working, which I think is phenomenal. So that shows you how quickly we could be back rocking and rolling here. And then as far as the impacts that we have on the housing market, you can see. So I looked at the S&P. I think it was down between 25 and 30% last week, somewhere in that range. You can see in the correction for the S&P 500 between October of 2007 and March of 2009, it dropped 51%. You can look at what the housing market did during that time as well. So 2007, it dropped 4.6, 2008, 10%, 2009, 4.1%. So, you're looking at about just under 20% here as opposed to a 51% correction in the stock market. And so looking at that, I don't see huge declines in pricing as well. Again, it all depends on, and the number that we have to watch for that more closely than anything else is in the housing market would be month's supply of inventory. That is going to be a great leading indicator of future pricing for us. So if there's a number that we can look at as often as possible, it's that. If it starts hedging up pretty consistently, then it's time to start looking at, okay, terrific, we may see some depreciation through this. And it certainly is a possibility, and how much that turns out to be or how significant that is going to depend on, a lot of it's going to depend on how long the unemployment situation will last. All right, so breaking this down, we kind of covered some month supply of inventory information, a little bit of information on the economy overall. And people are going to ask about the margin calls in the mortgage market. You can talk to a lender about that, but from everything that I've understand is the Fed is working to go ahead and smooth that all out right now. And it sounds like they made some progress in doing so there. So I think that's going to work itself out. The Fed will intervene there and make sure that things continue to roll smoothly in that world. All right. So what's going on in Palm Beach County? And so this is going to be the market summary. This is derived right from information from the MLS here. So I can go Palm Beach County. So Palm Beach County, I can go March 2020, which was yesterday. So the reports that are provided by the reporting companies aren't going to get released for March until probably the 3rd or 4th week of April. So if you run these reports yourself, you can come up with the information that you need now in order to go ahead and advise people, which I think is crucial, instead of making them wait painfully. So this is going to be Palm Beach County, and here is that number one stat that we want to look at is absorption rate or month supply of inventory. And you can see since, where are we at here? Let's just say September of 2019, Palm Beach County as a whole has been right around 4.5 months of inventory all the way through this last month. So March 2020, nothing really has changed here in the land of month supply of inventory. And if you look down here, March of 2019, we were at 5.73, which is getting close to that balance zone between a buyer's and a seller's market. March of 2020, it's even more towards the seller's market. So if anything, we're going to see price appreciation, and you can see that already. So 2020 year to date and 2019 year to date, the average sales price is up 16.95%. The median sales price is up 10.45%. So that's huge, and we're still trucking along there. If you look at the average and median just for the month of March, that would be up 16% for the average sales price and 12% for the median sales price. So when you're looking at these numbers, this should give you an idea that we are so deep in a seller's market right now. I think a lot of people would welcome some more inventory to the marketplace here, and we certainly have room before we even start getting into a declining market from a housing price standpoint. So I just wanted to give you that information. And again, this is the county. So if you go back to that infographic that I made that shows nation, state, city, county, neighborhood, street. Well, let's take this down. So remember, we're at 4.5 months roughly for Palm Beach County. Let's go ahead and take a look at one neighborhood. So this is the Shores in Jupiter, and I just ran this report for a couple of our clients here so that they could see where they were in the neighborhood. Now, if you look at this, March of 2019, they were at 3.6 months of inventory. So they're dramatically so the Shores in Jupiter, Florida, in Palm Beach County, is dramatically outperforming the county as a whole. So 3.6 months of inventory there. Definitely a seller's market. Now look at just this last month. So March of 2020, 1.5 months. So that's pretty much the lowest number that I've ever seen. I mean, that tells you that you are completely out of inventory if nothing else came to the market right now in a month and a half. That's it. We're done. We have no more houses to sell. So that number could climb to a more balanced. It can climb all the way to 6 months, and we still wouldn't see a decline in pricing. We'd be balanced at that point. So these are pretty interesting to go ahead and take a look at. If you look at the average sales price is up 7.4%. Median is up 1 point here. So this is going to be 2019 and 2020. So really, that's just looking at the first quarter here. So this is the type of information that I intend to continue to provide throughout the COVID-19 pandemic here. And if you have any questions, feel free to go ahead and message me. Private message me, email me, leave a comment, whatever the case may be, and I'll certainly go ahead and answer those questions. If you ever want to send me an article, you can send me an article as well. I'll take a look at that, take a look at the data, and if I don't know the answers, I'll certainly run them by the smarter people that I know that have those answers for you. So thanks so much for listening to the video. If you have any questions, again, you can always reach out. Realtors, if you want to know how to go ahead and put some of this data together, down to the street level, because I know a lot of this is going to be stuff that we do every single day, but down to the street level kind of escapes a lot of people. So if you do have questions about that, where the data comes from, and what the different sources are that I use, you can always reach out to me. Phone number is 561-859-1839. Thanks so much, and stay safe and healthy out there.